Use only this strategy to finish the money in the market. This strategy works like this if you can trade with it, and in the shortest period of time, i.e. 1 minute, the MACD 4C indicator is used to identify the chart trend with histogram and to detect buying and selling with divergence, takes. MACD indicators on price and volume provide information such as taking confirmation, assessing trend strength, and forecasting the trend ahead. This indicator is based on the data available in the market, and using the calculations previously set for it shows us an output with which to make a decision. The MACD 4C indicator is an analytical indicator that measures market volatility for a specific time frame. By using this indicator, the trader can identify the volume of the transaction according to the riskiness and the market volatility. This indicator fluctuates around its middle zero using histogram. When the histogram bars start to widen above zero, the uptrend is strong as becoming, and on the contrary, when they start to shrink, it is weakening. The opposite is when the histogram is below the zero line and is negative. In this situation, the increase and decrease of the bars show the strengthening and weakening of the trends. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. Divergence in MACD. Among other signals that can be received by the MACD indicator, and it can be considered as one of the main applications of MACD, it is the discussion of its divergence with the price chart. In general, divergence can be interpreted in such a way that whenever the price trend is against the trend of the indicator, it can be said that divergence has occurred. Now, these divergences can be divided into two types, normal and hidden. Normal divergence can be seen in both uptrends and downtrends, and is considered a sign of a break or downtrend. Normal divergence in an upward trend is that if the ceilings are formed higher than each other and in the same direction in the MACD indicator, and the two ceilings of the histogram are lower than each other, it indicates a normal divergence in the upward trend. And in a downward trend, on the contrary, this case means that two bottoms of the chart are lower than each other, and two bottoms in the same direction are higher than each other. In the mean direction, it indicates a normal divergence in the downward trend. Hidden divergence, unlike normal divergence, which was a sign of a trend change, this type of divergence is a sign of the continuation of the trend, in such a way that in an upward trend, we compare the two bottoms of the price chart with the two parallel bottoms in the MACD histogram, and if they were in opposite directions, it is a sign of half divergence. In the downward trend, we must check the two ceilings of the chart with the two ceilings aligned with it in the MACD histogram, which, if they are opposite to each other, indicate a hidden divergence. Buy signal. When the histogram lines are increasing and the trend of the chart is upward, this indicator helps the chart to rise and changes color from liver to red. The first entry signal is issued, and when it breaks the 0 point upwards with a high acceleration, crosses, and change color from red to green, the second buy signal is issued, sell signal. When the histogram lines are decreasing and the trend of the chart is downward, this indicator helps the chart to fall and changes its color from green to rich green. The first exit signal is issued, and when it breaks the 0 point downwards with great acceleration, cross and change its color from green to red, the second sell signal is issued. Thank you for watching the video so far. I hope you can make the most of it. Watch the video related to the strategy.